Traders and investors, welcome to the general market chart pattern. Today we'll be taking a look at the stocks which we have been following regularly for quite some time. This includes Tesla, Apple, Microsoft, and Meta. This video is for educational purposes only and it is not a financial advice. Okay, so we are looking at the daily chart of Tesla. If you have been following our channel, we actually warned that the 2010 level was a really key level to watch. And the reason is that we had a confluence of patterns coming together, which was an indication that it could provide a good deal of resistance. And so far, this is what we have seen. We have not seen the price trade above it convincingly, and the market is kind of consolidating. Okay, so what do you expect now? So what we are looking at is just at the moment market moving in a trading range and in a consolidation, and if the overall market begins to improve, then Tesla is also likely to perform better. So, however, in terms of looking at some support levels, there is a possibility that if 187 level gives way, the market could pull all the way back to 173, which is 38.2% Fibonacci retracement. And I've also mentioned on previous occasions, we do have this gap here around the 150 level. There is a possibility that this gap could get filled. However, the momentum remains pretty good for the stock, and this 210 is providing a good deal of resistance. But if you look at the market behavior so far, it appears to be just going into a trading range. So a watch for 2010. If we get the breakout and the price trades above 210 on two consecutive daily basis, then it is good news for the stock of Tesla. Okay, so let's take a look at Apple. Okay, so the Apple stock reached our target of $150, and then in fact what it did was it went higher and touched this 61.8% Fibonacci retracement, forming a double top. And ever since, what we have seen is price just trading sideways to lower. And as of last Friday, something interesting to make a note of. What we had also mentioned was that the 38.2% Fibonacci retracement comes around $145 level, so to be precise, $144.53. And last Friday, the price came down as low as $145.72. Just getting close to that possible level, which could act as possible support. In between this, we don't have a good ABCD pattern. We have something here like this, and it's possible that it got extended. So yeah, so we do have the extension come to around $143 level. So yeah, that's the level to watch, between 145 to $143 per share level for a possible support. Let me just put here 143 to 144 possible support and a question mark because it remains to be seen. So this is what we are watching in Apple. Let's take a look at Amazon. So this Amazon stock has actually been a little bit disappointing for our further targets after hitting the level which we were watching for. That's around $112, which was a ABCD pattern, and also the 78.6% retracement of this move from the high here. So what we were actually anticipating was that perhaps the move had enough strength and we could actually complete the pattern formation at the $120 per share level, which is actually the 61.8% Fibonacci retracement of this big like lower. And if you remember in our last video, which we did, we actually did say and speak about that it was looking more suspicious, and that's why we removed that target from here and put in question marks here. And we were also watching for this level of about $96 per share level. That was the 61.8% Fibonacci retracement and 78.6% retracement levels here. Um, but the market actually moved lower. So what has happened is that I'm going to remove some of these levels. So this the 78.6% retracement level of this smaller leg. I'm going to remove this. I'm just going to clean up a little bit here. And what the market has done, in fact, is it has made an exact 61.8% Fibonacci retracement of this entire move higher. Um, and where it is at the moment is it could perhaps be a double bottom here. However, we have to be very careful in watching the price action over the next few days and look for confirmation whether this support is going to hold, and then we can talk about higher levels. And what is also possible is that what we are looking at is perhaps like in a formation of an inverse a head and shoulder, a head and shoulder formation, and the price could actually go back and retest the lows. So I am going to remove these um, patterns that we were looking at um, here, questions mark here. Um, and in fact, what we'll do is we will follow the price action over the course of the next week and see if this level is actually held as good support, and that way we're going to have another ABCD moving higher, something like this. Here we go. And that will take us to that $120 per share level that we were looking at. However, at this moment, with the kind of price action of the overall market, because of the hot CPI figures and the core PCE figures, um, the stock like Amazon, which comes under discretionary spending, could have a good significant impact because of inflation related issues. So this is what we are watching, and we are not sure whether this pattern will take place or not. So I'll just put a question mark, and we will keep watching the price action over the course of the next week. Okay, let's take a look at Microsoft. Okay, so the Microsoft stock is very interesting. Um, it had completed our APCD pattern around $263 per share level, and then in fact we had a higher target of $267 per share that was also achieved. But what it also did was, because of the momentum being so strong, it actually went higher and hit that 78.6% Fibonacci retracement at around $277 per share level. So when actually we had a really nice bar which closed above our 267 level, around that figure, we did give a higher target. It was met, and after that, the market has pulled back. And what we were also looking at was this channel here. This zone was a repellent zone where we found resistance, and what we were talking about was that perhaps the market could actually pull back to this top of this channel, and the zone which once was a repellent zone could actually be act like a propellant zone. So if we, I'm just gonna draw this a little bit further, and what appears to be happening is that price did in fact move lower and is coming towards this channel, and we'll have to wait and see whether it's going to act as a propellant zone and how the market is going to react. Now, just thinking about or talking about some fundamental news about Microsoft. So Microsoft has taken a position in the um, artificial intelligence space by buying the company OpenAI, I believe. So that is a pretty significant news because what it means is that it could have a good position in its Bing search engine, and it's going to have really good development taking place in artificial intelligence side of things, which is a good growth topic for the future. So that is kind of futuristic move, which makes this stock, looking at a fundamental perspective, pretty attractive proposition. However, we are not recommending any stock here. Um, we just do the technical analysis for educational purposes only, and it's not a financial advice. So, looking from a purely technical perspective, the stock actually moved lower than the 38.2% Fibonacci retracement. So, what it means is that we just bring in some other levels where we could have, possible zone where we can find some confluence level. So here the 50% comes around $245 per share level, and that's also the this channel coming down here, which could act as a propellant zone. So there is a possibility that perhaps there could be a little bit further downside, and that's the ballpark figure we are looking at, between 250 and 245 dollars per share level, if there is going to be some support coming in. I have just noticed one pattern which I am just going to take a look at and see if we have some Fibonacci expansion levels coming around. No, they were coming around. Those have been surpassed as well. So yeah, that's this is the kind of the zone which we are watching. So I'm just gonna put possible support zone to watch. All right, here. Now let's take a look at Meta. Okay, so the Meta stock, actually, we were looking for the stock to perhaps get to about $200 per share level, because that was the 38.2% retracement from the all-time high to the lows we have seen as of 4th of November 2022 last year. However, we were looking at this bounce as more of a dead cat bounce, um, because for anything convincing to happen, this 38.2% retracement level, we would like that to be breached on good trading volume and good price action. What we are also watching for is this ABCD pattern formation right at the 38.2% Fibonacci retracement, $155 per share level. That's gonna be, between 157 to 155. Could be a region for pretty good support. So that'll be a region of interest for us. Um, and what we have noticed is that there was some news here, and the stock had gapped up. That gap has been filled. So those things we need to take into account, and because the gap has been filled, there's a possibility, if the stock is strong, it might not get down to this level. That would be an indication that perhaps the stock is actually stronger than what we think or anticipate, and then some good price action will be able to assess further. So this is what we are watching in these stocks. If you like how we look at the markets, how we analyze these stocks using pattern recognition and Fibonacci retracements and expansion and projection levels, then please do subscribe to the channel. Also hit that bell icon button, that way you will know when the new videos are posted. And if you like the video, then please do hit that like button. That way I know that people who are watching the videos, they actually like the content, and it just encourages me to bring out more videos for you guys for education purposes. So thank you very much. Good day and good luck and good training.